Welcome back to another video, guys. This is a day where I actually lost trying to scalp half passing day for a 50K combine. So since I passed two this week, I decided not to trade those on a Friday because I didn't really expect much from what we were looking like from open. This is just a loss. Since I was trading 10 contracts, my leverage is higher, so going break even was the difference between like $1 and $100 on 5 points. And so for taking these two losses and then a break-even trade here, which I was actually just impatient on. This retrace on the 1 minute candle was to this gap of such a minor gap, but we were still trading more firmly on the 2 minute, which I could see. So it was just impulsive to not have had my stop a little bit higher. Our 90-minute candle open was right here. And since we inversed that price, we just moved lower for the entirety of the 90-minute candle. So I should have held this. It was a pretty good entry. There was no drawdown until this candle, but this one candle was just unexpected to me at the low. So I ended up getting break even there. That ran, and so I was a little frustrated. So I did another break even trade. That was the end of my trading for that day, and I didn't really care. Even at the stop loss, I knew that these levels were like key for it to really drop because they are so different on ESNQ. Like we're all the way below here on first presented. This is what I noticed yesterday. Our lowest gap on the 15 minute is all balanced on ES. So it's very important to note. We're entering that right now. And because it's well balanced and the 15 minute on NQ isn't, I'm expecting it to retrace lower. So that's why I was expecting a bit more of a dump if we were going to dump, so I allowed more attempts, but I still was going to go break even no matter what. And this just ends up, these dumps end up playing out over like until 12 p.m., which is holding probably 12 to 10:15 to 12, like an hour 30, hour 45 minute trade up to 2 hours. So you definitely have to hold these and not pay attention to the lower time frames so much. What I would pay attention to though is the times of the true microcycle opens. I'm gonna put it up here. I'll just show you. I'll make a video about it. But there are 6 true microcycle opens. 3 of them are from 9:30 to what is this one? Well, this is the last one at 10:15. So from 9:30 open, we have in the 30-minute po3, we have 3 of them. After 10 a.m., we have 3 more. And then this last one is 11:43:15, which is our last one that concludes our, that one like usually reverses, and that's why you would enter like in the last 30 minutes of, or last 20 minutes, 20 to 15 minutes, if you want to be like really precise on the time for a reversal for the 90-minute po3 before we get into like a lunch reversal, because we may or may not sweep that low. So your lowest low for profit RR-wise is going to be right there in that time window. But otherwise, let's go down to the entry. I'm just curious what's going to do right now. So we went over the trade. Now I want to go over what were we given in the day. And actually, I was really confused today by the SMTs that we created because we had a lot of them. We had 2 on the bottom, and then at open YM reswept the low of days. So we had a daily cycle. We had like 3 daily cycles that all played in one. And we also had a 90-minute and a bearish weekly cycle, which is previous day high getting swept right there. So this previous day high was very important. Previous day high, we basically didn't trade up into it after open, like after we sweeped it out in open and created our range. Because I was looking at this range, we did technically have a microcycle off of that too. So because it was a 3-stage weekly, there was no day. I mean, there is a daily cycle, but it is with YM. That's the only thing I noted. The daily cycle was with YM. Our daily, can't say it's clear, but daily cycle was with YM. Let me see if I can pull it up on a different chart. Okay, there it's much clearer. So the daily is on YM. You see the DC up here. And then we had that sweep to low from low of day. This sweep from here to there. And so for that reason, I was just unsure because on the 15 minute, like we changed direction, we looked that way. But I know that recently when YM is going one way, ESN and Q are going the other way. So I thought that we were going to short, and that's why I had stops break even in those positions. I was high in contracts because I wanted to. We were just trading on lower volatility today, so I could do that. Like this stop was 5 points, but this was only like a 70 point target, like something, or not even that. To the quarter high was like only like an 80 point target, something like that, which is crazy. So it's just much less than I thought, so that's why I decided to size up. And what I took into consideration was opening range PO3 gaps. So the opening range per 30-minute PO3 is technically what our manipulation is. Like I consider that entire time frame manipulation. And today our cycles didn't really play much help because one, we couldn't get a time-based SMT, which is this highest high in the daily cycle, and then highest high in the daily cycle. You consider that, but then it didn't sweep. At this time, we just had a high deviation. I mean, I guess I could consider that a microcycle now that I look back at it, but like this wasn't in. This was a distribution, not even in distribution. I mean, it was close, but I guess I'm picky about it, you know? So I consider this SMT all right, just lower probability, and that's why you would have more on top of it. So the 90-minute at previous day high SMT, and just alone a previous day high SMT has some strength to it. So I think I should have taken this short after. We'll get into the other true open entry, but I think looking at regular trading hours, we did have an SMT, like with our opening price. This was our highest high from opening price. So we did have an SMT for regular trading hours the entirety of the time, which would be right here. So we had a 3 candle pattern, like a different sweep variation, but still having the SMT at the high. I've been more focused on time-based SMT, so that's kind of why I'm like picky about it. But what really was the confirmation to enter was when our direction got chosen. Right here, first presented gap is about to get inverse. We had a lot right here. We had C of the range where first presented gap was made. We also had our 15-minute CISD, which the 15-minute CISD, you'll notice every day we get a 15-minute CISD, and we actually closed inside the gap, or inside like the body structure right here. If I pull out like quadrants of the CISD candle, which is the 3 candle pattern, you'd like the bodies are closing below CE. I know the wicks are like doing crazy shit at the high, but I'm noticing where the bodies are closing. It just looks so bearish. And so come 10 a.m. open, this like literally just the next 15-minute would not trade above CE of where this was. Like literally it just wanted to come all the way down. And that's kind of what I noticed what happens. When we have 15-minute CISD, then we'll like barely trade up into the range of that if we create a range. Like especially if we don't have gaps, like we won't trade up into that range after the 15-minute CISD, after like we get a close under that. So after that would be, I guess, after like 10:05, if 10:10 get a close under it, then we're just dropping 10:10 and then 10:15. Sorry, I'm talking crazy. 10:15. Like 10 a.m. closes and then 10:15 is trading up into this. Because the 15-minute CISD, think about how many 15-minute candles we have from open. So we have 9:30, we have 9:45, and then you wait for 10 a.m., and then you have the 10 a.m. distribution, really, which is 10:15, which is why we're going to talk about the true microcycle opens. So really we have 3 candles until that, 3 15-minute candles. So when I say low resistance is between 2 and 3 after like the first 30 minutes, then that gives you a hint on whether we're going to actually like trade in a range or drop for the day like this. But it's not really the day, it's just till like 12. And you see how much we're retracing now, we're breaking structure. If you just had a trailing stop, you'd be out for less. Now there's a 90-minute at this low. So it's all time-based. That's literally all we're talking about for exits, time-based exits on really big days. So putting on the octants again, actually let's look at the true nanoscycle open times. So I'm not even gonna read them off. The most important one is right here, 10, 13, 15, 10:13 a.m., 15 seconds. So you'll notice how each one of these ends, it's like 45 seconds to 15 second. It's a 45 second. And for that reason, it's because we're splitting the time intervals of the true microcycle opens into quarters. So that's the true nanocycle opens. And the biggest thing for it is finding the right time of day. Because we only have one after 10 a.m., it's a good indication of when our 10 a.m. manipulation, which meaning like our wick, is in play. Because if we look at our 4-hour candle right here, we had our 4-hour open. 10 a.m. open is right here. We create our manipulation, which ended up being this, I guess, SMT that we had, which was the sweep of all these relative highs on ES on the regular trading hour. So all these relative highs just got swept out by after 10 a.m. because 10 a.m. open was here. Swept out all the relative highs, changed the direction, 10 a.m. price inverted. And once 10 a.m. price is inverted, what are we looking at? We're looking at the true microcycle or true nanocycle open time. Like whenever it happens, whenever 10 a.m. inverses, before and after, we're looking at the price and true nanocycle open time. What price is going to be at that time. Because if we're just looking at the times it inverses, well, yeah, you could take a long entry off of that if you're expecting bullish. That's what I did. And that's why I entered there off this gap and had to stop so close to it because we got a good entry. After that, we took this high. I thought we were going to move higher. We didn't. We created look at our po3 levels, our octants, especially for the 15 second because it aligns so well. The 15 second right here, this minor gap, trading under that. Then we trade wick up into this. So why I would use these is because any stop you would have that would be at one level and having a stop to the next one, that's all you would need. That's literally all you would need. Because if we just look at the times we traded up here, once we leave that, we don't trade up into it. Like I mentioned this before. When we're like really low resistant, then this is when you use the octants of the 30-minute po3. Because when you get a good level, and what I'm looking at is OTE. Like, I'm just looking at OT. I don't care, like, how we've traded in between that. I mean, I guess we can just put on the octants because this upper range where the octants are, this is 0.75. This is where it would be, like, this would be a great entry. Otherwise, anything above CE. And why I use CE is because 10 a.m. price. So, like, this entry right here would be great. You tap into a gap, 15-second gap. And you're distributing, you already have a market structure shift away from that opening price, from true nanocycle open. From that time, we're creating market structure shift after that time. So looking for displacement after that time and then having a stop at the swing high, that's where your trade is going to be based off of. And on the 1 minute, it happens really quickly. So you're going to want to enter on the 15 second and then hold based on time because holding based on P&L, especially when you have lower stops, you want to size up. And if you want to have that real, okay, let's look at the next true market cycle open time. Because if you want to really know the direction it's going, even on the lower time frame, that's what you're going to have to do. You're going to have to wait out these true market cycle opens. We accumulate. We also have 10:30 opening price, which is our 90-minute po3. This is 10:30. It's a big candle. So we open there, trade up into the 15-minute gap, which is what I thought we would do. Trade up into this 15-minute gap. This would be ideal scenario. Trade up into this. We find a lower time frame SMT, or it's just time based, and then we enter on continuation off of time and off of the po3 body closing. So off of that, your real entry would be after the true nanocycle opens, after the next one opens. Because if you know that after those open times, we're going to really choose a direction. Then between those times, you don't want to be entering. So waiting for the next one to open. So from 10:30 open, we had 10:35:45 until 10:58:15. So between that time, this nanocycle really wasn't having us do anything. I thought that it was going to trade up into this that it created, and it ended up not doing it. So looking at the 15-minute open, we're going to mark out our 15-minute open here. This 15-minute open was our standstill candle where we create the wick low for our gap. So at 10:45, and usually this happens earlier, but whenever the gap is created, it doesn't matter because we had this other in between candle at kind of like 10 a.m. Candle wasn't moving anywhere, and then we displaced off of 10:15. And then 10:30 created a gap to trade into for 10:45. Then we're looking for our continuation. But when you don't get that gap to happen, it's a little harder to get like a precise, refined entry. Otherwise, you'd have to do the true nanocycle open times, which is on the 15-second and lower. Otherwise, your entry would be like literally entering off of this gap. So anywhere in this gap, since we can't use our octants for that, we can use the octants of the market maker range, but like that takes up too much time to do, and you don't really want to do that unless you're already have the day chart in, like or you want to do that at the beginning of the day no matter what, if you're going to do it. And it doesn't really play much value when you're into the second chart. It's just too high a time frame for it to matter to what you're doing. But the entry would then be to sell side target, and then the time-based entry, like I said, I mean, we were already pretty far into this range. I expect it to come all the way down here, just maybe not for a while. So it was definitely harder because our target was so near. After this time, it wasn't really worth the trade, and that's why I cut it there, because I was like, I didn't expect this done. Honestly, I did not expect it. I thought it would just come slower down here after, because we were kind of like below C of the range and OTE range. It doesn't need to come to like a 90% closure, especially when ES already did that move to the 15-minute, and that 15-minute, it looks like we're already changing structure off of it. So that was how I read the day. I mean, I just didn't read it right, because on paper, I'll just log out and show you. On paper, I literally took this trade. Like, I loved how this was looking. After 10 a.m. price, I literally logged in, saw this gap, and I was like, okay, we're displacement candle. We're gonna have like a sliver of an entry gap, and the octant levels just looked great because CE was at 10 a.m. price, like literally at 10 a.m. price. So I didn't think it was just gonna return to there, especially if it was at CE and we already like traded. I mean, sure, there isn't a gap we touched there, but I don't think that it would. It's so close to the 15-minute CISD, I thought it would drop, and it did. So that's my entry right there at that level, which it aligned with. So 15-second, clearly the best. I'm just always going to tell you. I took it to true day open. My further take profit was actually this nearer drawn liquidity. So this is DC. But I mean, we had this low just like in perfect place. So these are kind of just like low, that are not sweeping each other. So just after a large displacement too, like large gap up, and then we have three lows that are just kind of hanging there. I thought that we would especially just dump from this to this. So I would read kind of where we would be going between that, and that would be like 87 to 100 points from that entry. Best entry you could have gotten was off the 15-minute CISD. I did wait till 10 a.m. price inverses just because I like how the RR is. Because when it inverses, it usually doesn't come back to that. Something I noticed from Powell's teachings. But that's all. We talked a lot today, and there was really a lot to talk about. I mean, I liked price action today. We had a great 10 a.m. open. We had a great 15-minute CISD moving us lower. Just had to wait till 10:08 when the new cycle opened. So I do think this was an XAMD, I'm going to be honest. I think this was an XAMD today on that, and that would make sense because it's a fractal to the 90 minutes, the same one, and then that would mean it's the same, sorry, not AMDX. If this was XAMD, I just think that the cycles today just messed up my head too much. I'm like, if that doesn't help out with the actual cycles, you have to go by just the time that they're opening and what it's looking like it's doing, and then using the true opens to determine that, with them getting either CISD, which is like they're changing state in delivery for that time interval for the true opens, whether it's the small ones, true nanocycle, micro, or true New York, but or if it's like just continuing. All right. We're gonna have to edit this video a lot. So I'll be excited to see what we can trade next week. I'm thinking that we're gonna get some good movement. We're getting into the middle of the month, and it's always good movement in the middle of the month, middle and end of the month. So I will see you guys in the next video. Take care.